We're now joined by Mr. Sudhakar Ram, the MD and Group CEO, and he's here with us in the studio. Good afternoon, sir, and apologies for keeping you waiting. This was a disappointing quarter for you. Even the previous one was. So it's two back-to-back weak quarters. Your revenues were down 1.3%, margins came down to 3%, profits down 40%. What was the key reason for that, and do you expect things to improve?
Yeah. So given the nature of business we have, which is high-end digital transformation programs, I mean, there will be quarter-on-quarter variations given the nature of our program. So like I shared last quarter, that the UK government elections actually put all new programs on a hold, and now we have seen a gentle revival of that. So we did expect, as some projects were coming to an end this quarter, that some new projects will start up, but that got delayed. So that's the reason why this quarter was not as good as we thought it should be. But going forward, we have announced an uptick in the order book. We have announced new wins. So we do see that the growth will come back in terms of...
what could be the quantum of growth?
We don't share the quantum of growth. We don't have any guidance policy. But we will see growth in the next half of the year. But broadly, in terms of the business we are in, which is digital transformation, more than half our business comes from there. We see that there is a buoyancy in terms of demand, definitely from a government perspective, as the UK government is trying to do a channel shift program. But it's also from retail and financial services that we also focus on. So we do see that the nature of work that we do is unique, and there will be a demand for that.
But revenues will grow in the coming 2 quarters.
Yes, it will.
Okay.
Yeah.
All right. Will they grow as much as the industry grows? 12 to 14% is the industry guidance. Would you qualitatively tell us before, will it be less than that or more than that?
That's quantitative. No, I think the growth will happen. See, some of this is difficult to project because large programs take their own time to build up momentum in terms of revenue. But we do see that because the deals are in place, we have a pipeline in place, it should improve.
What's the revenue run rate that you expect from Indigo Blue?
Indigo Blue is a very focused niche consulting. They only do agile program management. That is their business. So they are on an annual run rate of about £6 million a year, which is about 60 crores. They should start growing, given the Mastek name and the traction that they're getting in the marketplace. They will see a growth in their part of the business also going forward.
Mastek, sir, could you give us a sense of what kind of order revenues? Could you break that revenue up for us in terms of your IP-led business and domain-aware business?
So we are, I mean, after the Majesco demerger, Mastek is pretty much in the domain solutions business, and most of our new work tends to be digital transformation programs. The largest portion of our business is government, especially the UK. Almost 60% of our business comes from there. And the balance is split equally between retail, financial services and others, almost equally.
Okay. Okay. So coming back to you, your utilization has improved to 82.2%. Do you see it maintained?
Yeah, I mean, utilization in our business when you're in projects will keep, again, moving a bit. But we are typically in the high utilization. We don't sit with a large bench. We don't have a huge number of trainees recruited. So that's not a key metric for us.
And what about DSO days or days sales outstanding? That improved substantially.
Substantially.
What was the reason for that?
I think we just got some good collections and some advances. But typically our DSOs have always been at the 55 to 60 day thing, which is very healthy in the kind of business we are in.
Okay, so majority of your revenues come from the UK government. Anything seen in the Indian government from this Digital India initiative that we've taken?
We've seen some signs of it. We just won a deal with a Credit Guarantee Corporation in India. So we are very active in the social justice domain and sales tax domains in India. So we will see that also grow over a period. But India is a small market for us. It's about 5% of our business.
Okay. So without giving us numbers, at least you believe the worst is over for Mastek?
Yeah, yeah.
All right, Mr. Ram, we'll leave it at that.